You know, at this stage we are learning the accounting cycle on the basis of journal entries. In this accounting cycle, first of all, transactions are converted into journal entries. Then on the basis of journal entries, ledger posting is done, and on the basis of ledger posting, trial balance is prepared, and on the basis of trial balance, final accounts are prepared. So let's take the previous question. The journal entries are cash account debit to capital account rupees 5,000, purchase account debit to cash account rupees 1,000, cash account debit to sales account rupees 2,000, wages account debit to cash 300 rupees, closing stock 31st March 2013 rupees 200. So in this question, 1, 2, 3, 4, 4 journal entries has been made. And let's make the list how many accounts or items are involved in this journal entries. And that will be cash account, capital account, purchase account, sales account and wages account. 5 items or 5 accounts are involved in these journal entries. So we will have to open 5 ledgers. Number 1 cash account, number 2 capital account, number 3 purchases account, and then sales account, and then wages account. Now we have to start ledger posting on the basis of journal entries. Let's take up first journal entry. Cash account debit to capital account rupees 5,000. What it means? Cash account is to be debited by rupees 5,000 and capital account to be credited by rupees 5,000. So come to the cash account. Debit cash account rupees 5,000. What it means? Write down rupees 5,000 on the debit side of cash account in amount column. The date will be 1. What should be the narration in particulars column? 2. You have to start with the 2 on debit side or left hand side. When cash account was being debited in journal entry, the opposite account was capital account. We have to write down the opposite account, means the credit account, and that is to capital account. Now, to capital account rupees 5,000. It means credit capital account by rupees 5,000, or in other words we can say write down rupees 5,000 on the credit side of capital account. So in the capital account on credit side, please write down rupees 5,000. The date will be 1 and the narration will be by cash account, because when capital account was being credited, the opposite account was cash account, means the debit was cash. So write down by cash. Now, purchase account rupees 1,000 means debit purchases account. So come to the purchase account. On debit side, write down rupees 1,000. The date will be 2 and the narration will be to cash account. It means purchases account has been posted by rupees 1,000 on debit side, or in ledger posting we can say purchases account has been debited by rupees 1,000, whatever you say. Now, to cash account rupees 1,000. So come to the cash account, and cash account has been credited by rupees 1,000 in journal entry. The same thing will be done in ledger posting, means cash account will be credited by rupees 1,000, or we can say we have to write down rupees 1,000 on the credit side in the amount column, and the narration will be by purchases account. Now journal entry number 3, cash account debit to sales rupees 2,000. Cash account debit rupees 2,000 means debit cash account. Come to the cash account and debit cash account by rupees 2,000. It means write down rupees 2,000 on debit side, and the date will be 3 and the narration will be to sales account, because when cash account was debited, the opposite account was sales account. Now come to the sales account. In journal entry, there is 2 sales account rupees 2,000. It means sales account has been credited by rupees 2,000. We have to do the same thing in ledger posting. We have to credit sales account. It means we have to write down 2,000 on the credit side. So by cash account, the date will be 3. Now the journal entry is wages account debit to cash account. So debit wages account by rupees 300 in the ledger posting, and the Amount is 300, narration is 2 cash, and the date is 4. Now on the cash count. Cash count has been credited by rupees 300 journal entry. So we have to credit cash count in the ledger posting. It means we have to write down rupees 300 on the credit side of cash count. In the amount column 300 and narration column by wages, and the date is 4. Now closing stock. There is no journal entry for closing stock. In this way, we have done the ledger posting. Now what we have to do? We have to start calculating closing balances of each and every account. Let's come to cash count. On debit side, the total is 7,000, but on credit side, the total is only 1,300. So we will have to supply 5,700 to the credit side. Now the total is 7,000 on both sides, and on 31st March 2013, we'll write down by balance CD 5,700. So this account has been balanced. Means we have supplied the amount to the weaker side, and now the total on both sides is 7,000. I mean to say equal. Now come to the capital account. On credit side, the total is 5,000, but on debit side, there's nothing. So supply rupees 5,000 on debit side. And what will you write down? To balance CD on 31st March 2013. Now the total on both sides, rupees 5,000. Move to the purchase account. Debit side, total is 1,000, and by balance CD, rupees 1,000. On credit side, the total is rupees 1,000 on both sides. Move to the sales account. The credit side, the total is 2,000. Supply 2,000 from your own side to balance CD, rupees 2,000. Date is 31st March 2013. The total on both sides, 2,000. Now wages count. Debit side total is 300. Now on credit side, write down by balance CD on 31st March 2013, rupees 300. Now the total on both sides, rupees 300. So on the basis of transaction, journal entries were made. On the basis of journal entry, ledger posting was done. After ledger posting, closing balances have been calculated for each and every account. Now what we have to do? We have to make trial balance. What is trial balance? Basically, trial balance is the list of closing balances of different ledgers. Okay, let's make trial balance. Trial balance as on 31st March 2013. Don't forget, always write down trial balance as on, and then write down the closing date. And in this question, the closing date is 31st March 2013. You know, when trial balance is prepared, we have to use scissor style, means left to right, right to left. If we take any closing balances from left side, that will be written down on the right hand side of trial balance. If we take any closing balance from the right hand side of ledger, that will move to the left side of trial balance. So first of all, cash count. By balance CD, 5,700 on credit side. So come on the debit side, cash 5,700. Then capital account, to balance CD 5,000. So take this 5,000 and move to trial balance on credit side and write down capital 5,000. Now purchases account, by balance CD rupees 1,000. So from the credit side, move to the debit side. Purchases rupees 1,000. Now sales count. Closing balance on debit side is rupees 2,000. Move to the credit side of trial balance. Sales rupees 2,000. Now wages. By balance CD 300 rupees, means on credit side. Now come to the debit side of trial balance. Wages 300. So on trial balance, we have got three items. On debit side, cash 5,700, purchases 1000 wages 300. And credit balances, there are only two credit balances in the trial balance. Capital 5,000, sales 2,000. And what's the total on both sides? Rupees 7,000. It means our trial balance is balanced. The total on both sides are equal. What it means? If the totals of the trial balance on both sides are equal, it means we didn't make any mistake during journal entry or ledger posting. So what will happen to closing stock? Closing stock will be written down at the footnotes of trial balance. That will be closing stock as on 31st March 2013, rupees 200. And on the basis of this trial balance, final accounts will be prepared, but final accounts I will teach you in the upcoming segments.